And I had that fear, like, oh, maybe I'm not going to rent it out. There might be not another tenant, you know what I mean? Because it was like
Exactly.
it was the first turnover, so it's like I want
Yes.
to get somebody in.
Yeah.
And now I'm like, I'd rather have it sitting for a month and find a
Yes.
tenant that's good than have somebody that I have like 6 months of trouble with.
The Abundant Wallet.
Right. Well, Floris, thanks again for joining the Abundant Wallet podcast. Pleasure to have you on.
All right.
Awesome. So cool. Yeah, I always kind of start with kind of how, like, your origin story, right? Like how did you come across real estate investing, or how did you get involved in it to where you were like, you know what, other people are doing this. I think I can be
Hmm.
successful at this. How did that
Yeah.
how did that come about for you?
I always look for opportunities to kind of create passive income for me, but also I looking at my the future of my kids, the way the system is set up. I want to provide them with an opportunity to kind of not have to worry about money at some point when they get older, and create like be able to like give the whole portfolio over to them at some point. So I'm looking at long term. But a friend of mine, he's a realtor here in Austin and he has like 50 units and he's like banking. So I like I can do that. I'm pretty good with people.
Yeah.
I did sales for a long time. I didn't want to do sales anymore, but I like human contact and connections. And there's so many bad landlords I've heard in this country, and I'm like a very strong ethics. So I wanted to be different and provide like a service being a good host for people. So for me, it was really like building something or building towards something where I can be financially independent at some point. I'm not like very strict on when, ideally in like 3 to 5 years, as I mentioned, but I had to start somewhere. And so I started talking with a lot of just investors and realtors to figure out like what would be a good market. Austin is crazy. It's grown a lot. There's an oversupply at the moment. It's too expensive. So I
Yeah.
started looking at other options, and that's how I ended up in Temple, Texas.
Yeah, great. No, that's great. You touched on a lot of things there, not only passive income but like to generational wealth and the legacy
Mhm.
component for your kids and their kids.
Yeah.
That's fantastic. What would you say is like maybe one of your early wins that, you kind of made you realize like this is this is something I want to pursue, or this actually works.
I think straight away, like the choosing to go midterm, I think was a great decision because I was looking at like I think my interest rate was almost it was 6.85% on the first duplex, which is kind of steep. And I'm like, I'm not going to make any money if I do long term, so I'll just, spend an extra. I think I spent 25 grand for both units to fully furnish them like completely.
Okay.
It's not that much, like, and I thought like, okay, I'm going to make a lot more money because I was looking at like how much these midterms are renting for in Temple. Like, it's crazy, right? It's a lot more work. But I was also, I think I almost had like a nervous breakdown when we signed the first property. I was like, what did I do? Like you get that initial fear, like
Yeah.
when it
Buyer's remorse, right?
hits, like we signed on a Thursday. I took a U-Haul, loaded it up the same day, drove it to Temple, unloaded everything, put everything in all the different rooms. And the next day was going to get help. And then like I was like, what the hell am I doing? So, but we got in 2 days, I got everything set up. Then on the Monday I had photos taken. Listed the properties on Tuesday, and by Friday, I had both of them rented. So it
Fantastic.
went extremely fast. So that gave me the confidence, like, okay, like I put in all the work and I had this big fear, but then immediately that dropped. And then like buying the second one was just like buying a cup of coffee, like, okay, we're going to sign some papers, like, and get it done, get it listed. And I had them also rented again within 2 weeks before my first payment was due. At the other units rented too. So I think it's like just buying the first one, seeing it's really not that scary,
Uh-huh.
and well, it is in the beginning, right? And then it gets easier. Now it's for me, it's like, when we get a third one, it's like, okay, we'll do this thing again. But I think a big learning for me, which I didn't know that when you do midterm, it kind of messes up financing, right? Because A bank is going to say, like it's risky. You
Yeah.
might have a lot of like vacancy. It's, so they're not counting it as income. When you do long term and they say, oh, we have like year agreements, cost the tenants are paying, they'll just keep throwing, you can keep getting mortgages. So that first mortgage was initially, I need to prove showing my tax return that they're making money. And then they can include it as income. But it's a lot easier if you just do long term, even though you make way less money in terms of financing. So now I'm like, okay, I'm just going to keep doing long term for now to get to all the units that I need. And then I'm just going to convert a bunch to midterm once I already have these units and have them refinanced, because I know I'm going to make a lot more money. And then I would also
Yes.
probably need to quit my day job at some point, to just fully focus on real estate at some point. That's the goal. Yeah, but we might move back to Europe in the next 4 years. So, and then I don't know how that's going to go. Like, I think I'll be able to still finance it even if I'm not living in the US.
Yeah, I think
There's still ways, to get money as long as you can put the 25% down and you're showing income on all the units that you have. It's probably not too hard to get another loan, might not be a normal, like standard mortgage, conventional, but DSCR, whatever. Like
mhm.
there's so many options in this country, which is
Yes, yes, there is. Yeah, no, yeah, definitely want to unpack that a little bit. Yeah, I mean, it seemed like and we all go through it. It's your first one. You have a little bit of intrepidation, and
yeah.
it's kind of like what's that syndrome they call? Basically imposter syndrome, to where you're like
Mhm.
you're kind of leveling yourself up, getting new skills, and
Yeah.
you're kind of unsure, but like with you being kind of entrepreneur minded, you have that vision. So even though like the underwriting from the banks, for long term is more stable on their side, at the same time, you're like, I think I have to pivot to midterm because I am not going to have that much cash flow. So I think
Hmm.
that's a good heads up. And
Yeah.
you're definitely on your way, and I feel like regardless of where you live, like I was in a mastermind that did buy and holds, and they were in all different types of countries. So
Mhm.
I
Yeah.
I think the sky is the limit. So yeah, great job on
Yeah,
that. Awesome.
yeah, and I think it's also like even, like okay, maybe you're not going to make a lot of money now, but then it's always a good time to buy, right? Like people are like, "Oh, I'm going to hold off." Like now, like I'm going to wait a little bit till the rates drop like a tiny bit, but I'm still going to buy the other duplex because I
Mhm.
know as long as I can cash flow like even now like $200-300 a month,
Yeah,
once I refinance, and once the rates are dropping again, home prices are going to fly up, right? So if I could probably get a better purchase price now than I
yeah,
can get it like 2 years from now,
yeah. It's definitely a
So
buyer's
and
market.
and as long as I have these units rented, and like it doesn't really matter that much, right?
Yeah, yeah. I mean, it's a long-term play. So it's,
Yeah,
cash flow is good because it's here and now, but there's a huge equity play at the end of this. Once you determined to sell,
yeah.
you take those disbursements and go find something, bigger and better, right?
Yeah, yeah, but it's still like I'm still building and I still just want to keep buying and holding for now.
Mhm.
And I think you can get 10 conventional loans. So I think there's opportunity as well once you get to a certain amount of conventional loans to kind of roll it over, and bundle everything up. But yeah, but that's a longer term
Yeah,
thing, and I'm like thinking about that right now because it's not really relevant. So I'm really taking step by step and focusing on what matters now, buying units, you know?
exactly.
And I chose personally both of my duplexes are new builds. So I'm making the choice to purchase only new builds.
Okay.
I don't have any hassle. I know like the homes are good. You're not going to get a lot of maintenance issues. Probably if I would like buy homes and refurbish them completely and rent them out, I could probably make more money or buy more units quicker, maybe.
Yeah.
But I don't have the time and I don't have the energy right now with two kids, like to do that, like as I'm still working my W-2 job, which I'm very happy doing. So I'm really looking at like the long term and not like focusing on like quick gains, like it's yeah.
Yeah, no, that's good. You're
But I think, it depends on everybody's situation, like that for me that works and I'm very comfortable with that and I don't mind paying a little bit more for newer homes, and somebody that maybe like we're fortunate that we have the money to purchase three new duplexes, to have three down payments. So that's just my personal situation.
yeah,
And I think somebody that has less money, they could still get in the game, like, but you have to find a way or an approach that works for you, right?
exactly. There's so many different ways to do creative financing and
Yeah.
what works for your situation. But no, that's awesome. I mean, you're wearing a lot of hats, and I feel like money and cash flow is good, but I feel like time is the ultimate asset, right? You can't get that back. So
Yeah.
yeah, but no, that's great. So have you had maybe a tough lesson or a setback or maybe a challenge that you've
Yes, I
overcome?
had
Yeah.
one tenant from hell. It
Oh,
was
oh,
awful.
okay.
And I didn't follow my gut. It was a midterm tenant, and I had like this feeling in my gut, like this is I shouldn't do this with this person.
Yeah.
When I started talking to her and I rented it out anyway, and it was a nightmare. Like
Ah,
he was like calling me all the time, and then at some point she like started making me like the villain, and I was like
gosh.
taking advantage of her, and like she was lying to me. She said she had like one service dog, but she had like multiple dogs and a cat.
Gosh.
I every time I had to like chase her to pay the rent, then she abandoned the unit in the end a month before she was supposed to leave. And I went there and the place was just a nightmare. Like it
Ah,
was like there were holes in the walls that I had to fix. She
oh,
stole
wow.
a bunch of stuff. There was like trash everywhere. I had to spend like $500 to kind of, like to get it cleaned again. It
Yeah.
was, so, and then like I lost a month rent.
Hmm.
I had to
Yeah.
replace whatever she ruined. There was another $1,000. So it was like an expensive lesson.
Yeah.
But that was my second tenant that I had in the midterm place. And
Okay.
it was extremely stressful. It was really like impacting like my mental health. It was awful.
Wow.
So but when she left, I was like, yeah, I'm gonna clean the shit up. And then I had it rented like 2 weeks later, it was rented again,
Yeah.
and it was fine.
New slate.
But like really, if you have a bad feeling, like trust that and like about a tenant and not like I gave her the benefit of the doubt and I like shouldn't have. So that like I've gotten way stricter
Ah,
and
that's good.
trusting the way they communicate. If I have like hesitation, I'm
Hmm.
just not gonna rent it out to that person.
No, no, that's a very good point.
But you're dealing with humans, right? So like it could still happen again
Yeah.
and not like, I'm just trying to be, yeah, like set boundaries, like don't call me at 10 o'clock at night, like
Yeah.
I don't know, like it was awful. Like, but it was like it's probably the worst experience I've had with a human in my life. Like it was that bad. Like it was really not
Wow.
good.
Yeah. Yeah.
Yeah. So that was, but I've learned from it and
Yeah.
I've moved past it and it's fine now.
Yeah.
But once I
That's
was
good.
in there, it was very, very, very difficult. Yeah. But
Yeah. No, that's good.
it was
You
like,
have that experience that
uh,
you can pull from if you need to. But
yeah.
it's
If you
it
can avoid that, like
yeah.
do it.
Yeah, yeah. It sounds like yeah, maybe more due diligence up front. Well, I think
Yeah.
we're all guilty, right, of like the shiny object syndrome. Like this is our utopia. This is gonna be great.
Yeah. Because
But
I had that fear, like, oh, maybe I'm not going to rent it out. There might be not another tenant. You know what I mean? Because it was like
exactly.
it was the first turnover. So I was like, I want
Yes.
to get somebody in.
Yeah.
And now I'm like, I'd rather have it sitting for a month and find a
Yes.
tenant that's good than have somebody that I have like 6 months of trouble with. You know what I mean? Like it's worth
Absolutely.
losing a month's rent over that, right? For me
Yeah.
at least.
Yeah. It's all about quality. Yeah.
Uh,
Yeah. You definitely want
and
the quality.
I think what's really important is to keep all your finances separate. So I opened an account at Baseline, which is like his online bank for real estate investors, and
Oh, okay.
it's incredible. It's an awesome, like really, really good product. So I'm super happy with that.
Yeah, yeah.
Like they have like bookkeeping, like everything is in there, like automated. So I automatically invoice my tenants, so I don't have to worry about like sending invoices or chasing payments.
Uh,
It's all
you,
automated
you have a
through.
system. Yep.
Yeah. So that really saves me a lot of time.
That's great. Yeah, we'll have to get that reference for you so we can put that in the show notes. But yeah, that sounds awesome. So kind of moving on to the next part, how do you typically like think about deploying your capital across deals? Is it do you prefer using your own? Do you
I've been
leverage?
using my own so
Okay.
far. Yeah,
Okay.
I just like put 25% down, and that's what I like to keep doing. So once we have the other duplex, then we have three. I'm just going to save till we have enough for a down payment on the fourth one, and then like rinse and repeat.
Okay, that's cool. So you basically have no partners. It's you and your wife, and you own total ownership is between you
Yeah.
guys. That's
Yeah,
cool.
and I'd like to keep it like that as well, like
Yeah.
we're like fully in control. We don't have to like, justify anything to anyone, and
Yeah.
she is like totally passive. Like we own both of the units together or all the units together, but she never asked me about it. We never talk about it unless there's an issue
Right.
that I might need help with. Like we'll discuss it, but she's like, I really don't care. Like, so it's
That's
not a
cool.
topic we ever discuss. We just have these homes, and like I always have them rented. And it's like she trusts me that I do the right thing,
Yeah.
and it's like it's my gig. I run everything, and she's completely like passive. She's just on the loans, but that's it.
Yeah. But like she's on board and she supports you, which is awesome.
Totally. Yeah,
Yeah.
yeah, yeah.
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 Oh, that's
Yeah.
great.
Well, I mean, yeah. So in that sense, we're doing it together. Like we're a team in that, and but it's like she's really like trusting towards, and it's, we're just making
Yeah.
money. So I'm like, that's good, right?
Yeah.
Yeah.
That's awesome. That's great.
Yeah.
So where do you feel like maybe capital could either be limiting you or like slowing you down right now?
I mean, we got more capital, we can buy more units, right? I
Right.
guess. But then again, I'm like, yeah, I want to keep the full control. So I'm like,
Hmm.
and I'm also not really playing the long-term game. So I'm like,
Yeah.
if it takes a little bit longer than another 3 years to get to 10 units, then it takes a little bit longer.
Yeah.
If the rates drop suddenly in the next year and I can refinance, I'm probably going to get to 10 units way quicker. And I think once you're there, I don't think you're not gonna stop,
Yeah.
like
Yeah. You're
it's
just
like,
going to
okay,
scale
then is
faster.
then
Yeah.
is my first goal that I want to reach.
Yeah.
And then after that, I think you get the snowball effect, right? Like
Yes.
you're generating more income so you can buy more units quicker. And I think on one hand, like the more units you have, your risk actually gets lower, right? In a way,
Yeah.
because it's not going to happen that you have like all units sitting empty at the same time, right? So
Correct.
you can always like, if one unit sits empty for a couple months, but you have everything else rented, like it balances it out in the end, right?
Yeah. Yeah. Your
Unless
risk.
something drastic happens and the world falls apart, but it's pretty unlikely.
Yeah, exactly. No, no. The more units you have, the more risk is spread across those units. So,
Right.
no, I think that's
Yeah.
awesome.
But it's a change of mindset because you're like, the
Yes.
more you get more and more debt. So people fear the debt, right? They're like, you're looking at, oh, you owe so much money to the bank. Maybe, but you have also all these assets.
Exactly.
I think people are generally they're fearful of like taking on debt.
Yeah, I see a lot of people having that scarcity mindset, and not all debt is bad. This is good debt.
Yeah.
This is
Yeah.
good. This is good debt, and
Yeah.
it's going
It's
to
not
work in
like
your
credit card
favor.
debt that you have to, get like
Yeah.
screwed on at 28% or whatever.
Yeah, exactly, exactly. Like so, you have this debt, but guess what? Your tenants are paying your mortgage for you. You have the
Yeah.
equity play, you have the cash flow, and
Yeah.
this is going to change your lifestyle and
Yeah.
your kids' future.
Yeah, and your cost base just stays the same, and rents generally over the span of 5 or 10 years, they're gonna go up a lot, right? Like
Yeah.
inflation it's not slowing down. So rents are gonna follow, right? And maybe not immediately in the first year, but if you look at the longer term of 5 years, I'm pretty sure we're gonna, like it's
Yeah.
kind of it's kind of easy math, I think.
No, I totally agree. So Have you ever looked at, and this is kind of something that I've taken advantage of and I've kind of strategized with, but have you ever looked at ways to like recycle or reuse your capital more efficiently between deals? Like I've had financial vehicles that I use,
Mhm.
and I heard about this concept where you basically privatize your banking function in your life
Mhm.
and you use this container money that's just private to you, and you use it as your own bank to where even though you're using your money is still growing as if it never left your private bank. And if you haven't, I would love to maybe after this, maybe schedule a further session where maybe we can take a deeper dive because, you
Mhm.
mentioned individually you can have a max of 10 mortgages or 10 loans against your name.
That's
But
what I understand. Yeah, I don't know what,
yep.
right?
And with this strategy, the sky is the limit. There's no cap. There's no, the underwriting is totally different. You don't have to justify your costs because you control all of it.
Yeah, no,
You
I never heard of that.
okay? Yeah, yeah. I'd love to do maybe a discovery call after this, but no, that's great. Yeah, when I first heard about it, I was like, this is awesome. And I've been using it for 4 or 5 years, and now I just fund my deals using my own bank, and it's great.
Okay.
And if I need to pay myself back, there's no timeline.
Mm.
It's you pay it back as you need to. But yeah, love to dive into that a little further on. But in terms of like, I don't know, I don't know if you're involved in other groups or other colleagues that do investing, but where do you think you see investors maybe losing the most money without realizing it maybe up front?
I have no answer to
No,
that.
okay,
I'm just really like,
sure, no, that's
not
okay.
really in any groups. I'm not
Yeah,
like, like talking with like people here, like there's one realtor I'm in touch with regularly.
yeah.
So I just kind of freewheel, man. I'm like,
You're kind of doing your own thing, and you're just
yeah, and I
like,
could
yeah,
probably, yeah, and I could be more efficient, but I also don't really like, I'm not, I don't really care. I'm like,
right,
I'm
right,
looking at the long term, and I know I'm gonna get there
yeah.
when that is, you know what I mean? Like it's not, yeah.
No, no, that's totally understand. As far as, I guess, maybe over the next 2 to 3 years in terms of growth or deal volume, are you kind of sticking to the same strategy, or what's kind of your strategy for the
I think
next
so.
three
Like it
years?
works for me. I like focusing just on that one area because it's the fastest growing city in Central Texas at the moment, Temple, and it's been going really well so far. Prices like the units that I'm buying, they're like like the first one 389, then I bought another one, like the home prices within that year kind of dropped. I bought another of the same unit from the same builder. It was 373 for like a duplex, right? And a 1,300 square foot, three twos. So they're like really good size.
Wow.
Uh,
Yeah.
and they're
And
really nice, So I'm like, I can keep buying in that price range for now in Temple. If anything is wrong with them, like I know it's like an hour drive. It's like it's very doable for me to go there. I'm like not even looking at Austin because it's just too expensive,
yeah.
And around there, like everything kind of closer to Austin is already like kind of went up too much. So for me, I'm like, I feel very comfortable in Temple because I know the area. I see all the growth happening. Like they're close to a big lake, Lake Belton. So there's, like people like to be around there, and I think if it works and the area keeps growing, like, why not just focus on that spot?
Yeah. It's a great market, and you're obviously reaping those benefits. So good
Yeah,
going.
yeah. So I just keep doing the same thing, there. And I think maybe at some point you could also look like out of state but I'm like, I just don't have the time for that. Like I'd like to do that at some point whenever I can just quit my day job and fully do real estate. Then I think I want to like, probably start looking at, okay, where else could we invest? I love like Taos, New Mexico is growing as well. It's a great spot to do Airbnbs.
Yeah.
So that'd be like an area like, probably. But it's like I'd need to spend a lot of time researching, going to places, talking to people. I just don't have the time right now.
Yeah, yeah. I'm kind of in the same boat because I do have a W-2, and The mastermind that I went through is like they teach you to build teams where you want to invest. And it's not just you, it's you have those boots on the ground. But yeah, you definitely have to do your own research for sure. Well,
Mhm.
cool. So I guess lastly, what message might you have for an aspiring investor who doesn't know where to start or wants to get involved? What what advice would you give them?
Just talk to a lot of people, talk to people that are doing it, gather as much like information. Like I really focused on, okay, like I need to find, look at what you can do. Look at like, okay, this is the money that I have, this is what I can invest, and then look for a market that works with like kind of the strategy that you'd like to follow. And like you can figure it out just by talking. And for me, it happened to be like Temple because like their home prices are good. There's a lot like that was for me, like, like everything kind of fitted for me,
Yeah,
in terms of what I was like looking to pay, in terms of like the down payments that I could do. So and then I think once you have that idea like kind of crystallized out and figured out, okay, this is where I want to go. Don't wait too long, just pull the trigger, get your first one and
yeah,
get it rented. Like it's really that for me, it was really like, okay, just take the first one, just jump in the deep end, and it's scary as hell. But then, like, once they're rented out, like the fear like drops, man. Like that
yeah.
for me, it was really like once like everything kind of came together and I got to rent it out, it felt really good. And then like your confidence goes up, and then it's easy to keep just doing it, I think, you
Yeah,
know.
yeah, you have that adrenaline rush, like I gave it a shot and it's working, and now like your second and your third are just going to be that much easier, right?
Yeah, it's getting over that first hurdle, and it's really it's very normal to be scared, I think, and also then like talk to people about it, right? Like it's shouldn't have be ashamed for your fear, and it helps to like kind of release your stress as well, and like do your due diligence when you're renting to people. Research them, make sure you're not like get
Definitely.
hot water right away.
Yeah, yeah, definitely. Well, great. Well, again, Floris, I really appreciate you taking the time.
Yeah,
Really enjoyed this conversation and having
thanks,
you
Larry.
on the podcast. But
All right.
yeah, we'll end it here and
Sounds good.